Good morning, everybody. Today I'm going to be talking about real estate and investing in real estate via the stock market, as well as the comparison with doing it directly. I've been investing money for 50 odd years. I made a lot of mistakes in my career. I've learned a lot of things too. I don't make as many mistakes as I used to, thankfully. And I want to share with you my knowledge and wisdom so that you can learn about investing in equities, other investments, and over time that will hopefully make you richer and also secure your financial future. But before I start, I'd like to just mention that at the end of this video I will have a little snippet. It's a nice story. It concerns a lovely lady called, well, we'll call her Lovely Linda for the sake of the argument, and how I ended up in her Mayfair penthouse flat when I was a young man, and what happened next. So let's just start off with investing in real estate. There's many people I know who love to own real estate. They like to own the four walls. The benefits are, if it's a holiday home for yourself, you can leave your things there, you can go and it's always there. But there are some downsides to it, and I don't like owning any real estate apart from my own home. In fact, I don't own any real estate directly apart from my own home. But let's just talk about the advantages and disadvantages of direct ownership versus owning real estate indirectly through the stock market and the various ways of doing that. So first of all, if you buy a second property apart from your own home, I mean, your own home is a different kettle of fish. You buy it for the utility of living in it. But a second home, it has a utility if it's a holiday home and you want to go and stay in it from time to time. But often you'll find that there's transactional taxes, maybe stamp duty, legal fees, could be 5%, depends on the country you live in. You'll often find that you've got land taxes, property taxes, which will apply on your property. And of course, you've got maintenance charges, you've got to pay the insurance and the utilities, and in some countries they have what's called REITs, or other countries they have resident tax and things like that, or non-resident tax even. So you could easily find you're spending many thousands a year on the property you own. So, okay, so you can say, well, what if I rent it out, like you do an Airbnb, for example, and you can get some income? Well, yes, you can. That's great. It's a lot of work because you'll have a constant stream of tenants, or if it's one tenant renting for a whole year, for example, you'll still have to deal with repairs, insurance, taxes, so you probably have to have an accountant to deal with that. And of course, you can get a perfect tenant, but what if the tenant has a problem? Let's say you've got a husband, a wife, and they have some babies, and then the husband loses his job, he can't pay the rent. What are you going to do? Are you going to kick them out? And put the woman on the street with her babies? It's a difficult situation to put yourself in. So that's one of the reasons why I personally don't like to own direct real estate. So the way I do it is to buy into mostly real estate investment trusts. Now, you mustn't forget that if you own investments in the stock market itself, those companies in which you're investing will often own real estate. So anyway, the minute you have stocks, you probably have some exposure to real estate indirectly. But let's talk about real estate investment trusts and the benefits or otherwise. Now, in some countries, and it's not every country, the dividends are paid without withholding tax. And there may be tax advantages depending on your country. I know there is in my country, that in Switzerland, that you have an advantage in terms of not having to pay withholding tax, and not having to pay income tax, and not having to pay wealth tax, and not having to pay capital gains tax. But that depends on the country, on those types of investments. So, first of all, what's the advantage vis-a-vis tenants? Well, the advantage vis-a-vis tenants is that you don't have to deal with them. You have a real estate company who's managing the book of tenants. There'll be hundreds, if not thousands of apartments. I'm talking residential real estate here, by the way. There'll be hundreds, if not thousands of apartments or houses, and the real estate investment trust is dealing with all the tenants. So if there's a problem with one tenant, It's not your problem, it's their problem. And also the cost of dealing with that tenant, maybe the eviction or whatever is necessary, it's not going to be a huge cost relative to the whole book of apartments, because the vast majority of people will keep paying their rent and so forth. Also, all the administrative costs, time costs and expenses will be dealt with by the real estate investment trust themselves. So they'll be dealing with repairs, insurance, taxes, and all kinds of other time-wasting things that happen when you own a property directly. You don't have to get involved. So it means that you're relieved of a lot of administrative work if you own a real estate investment trust. Now, going on from that, what about the frictional costs? Well, you know, and I know, that if you buy a property, there's always going to be some sort of frictional cost as you go in and out. You've got lawyers' fees or notary fees. You might have on the exit capital gains taxes to pay. There could be all kinds of frictional costs as you rotate from one property to another. And that adds to, if you're buying, it adds to your starting price. And if you're selling, it adds to, it takes away from your sale proceeds, reducing your profit over time. So I mean, if you're going to hold a property for 30 years, probably that doesn't really matter. But if your time frame is 3 or 5 years, it can have it can eat into a decent chunk of your profit. Whereas a real estate investment trust trades on the stock market. They're called REITs, R-E-I-T-S. They trade on the stock market. They usually have a very narrow spread between the bid and ask rate. The spread might be only pennies, and you can buy and sell, usually in size, at any time. In other words, you have something called liquidity, which you don't have with the property you own directly. So if you own an apartment directly and you rent it out, and then one day you need some money for whatever reason, what are you going to do? Do you have to kick the tenant out and sell it to get the better price? That takes a long time. Do you sell it with the tenant and get a lower price? But you still have to wait a long time for a buyer to come along to say, I want to buy a property which has got a sitting tenant. It's not liquid. Whereas with a real estate investment trust, you might not like the price that you see quoted on the stock market, but at least you can get out in a flash, in a second. So that's the reason I like real estate investment trusts. And now that reminds me of the story I was going to tell you about lovely Linda. Now, lovely Linda, she was a lady. She lived in Monaco, but she owned a lot of real estate in the UK. When I say a lot of real estate, probably 4 or 5 penthouse apartments in the centre of London. These were places in places like Mayfair, Park Lane, Regent Street, those sort of places. And she had an accountant who did all her work, so she didn't have to get involved in the nitty-gritty. In fact, she had a real estate manager who did all that work. And so if you can afford to have a real estate investment manager, it takes away a lot of the time and pain of dealing with tenants and collecting the rent and so forth. Anyway, she did. Lovely Linda lived in Monaco. She was unlike most of my clients in as much as she had inherited her wealth from former husbands. One could say she was quite a lucky lady, because she'd had the good luck to marry multi-millionaires who in some cases, by the way, I say some cases because there were more than one former husband, who in some cases had left her part of their fortune, obviously some of the fortune sometimes going to their children from former marriages. Now, Linda, we called her Lovely Linda because she was a very beautiful but not so young lady. I'm talking early 80s, mid 80s, something like that. So we're talking nearly 50 years ago. She'll be dead by now, I suspect. And she would have been probably in her late 40s, early 50s perhaps. But she was a beautiful lady, and we would from time to time visit her in Monaco. I would go with one of our investment managers and talk about the investments, and sometimes she would go to London and we'd meet up with her in London. she wasn't like most of my clients who were businessmen who'd made a lot of money by hard work. Her money had come from these inheritances. Now, we had a nickname for her, actually. We called her the Black Widow. The reason we called her a Black Widow was because so many of our husbands had died. I think she'd had 3 of them die on her. She seemed to have a propensity for marrying men with heart conditions or cancer or being overweight or something like that. So unfortunately for her, or maybe one could say fortunately, and I think she would use the word fortunately, she was still around, her husbands had died on her. And when you listen to her, she didn't have the best of husbands. Whilst they were all very rich people, they, in general, were kind of abusive to her. At least that's the way she felt. You know, they were dominant and would check what she spent her money on and things like that. And also, by her own words, they were all unfaithful to her. But be that as it may. Anyway, so on this occasion, she's in London. She's staying in one of her penthouse flats that she owns. And I go to London. I was going to London in the early 80s, a lot more than Monaco. And so I said, okay, I hear you're over in London. I'm coming over to visit some clients. Would you like to meet me? And she said, yes. Well, first of all, I proposed to meet her at a restaurant. But she said, no, Clive, I want you to come to my apartment. Now, perhaps a word of warning. You always need to be a bit careful when you've got a member of the opposite sex inviting you to a hotel bedroom or their house or their apartment. You know, assess the situation. But I knew her being alone in the apartment, it probably wasn't the best of ideas, but I didn't know that, didn't think about it, and it was the 1980s, and we didn't have the sort of stories we hear about now. Anyway, I said fine. And she said, I want you to come to my apartment because I'm frightened of walking out alone in the street because men keep hitting on me, which was hardly surprising because she was a pretty lady, even though she might have been in her early 50s or late 40s. She was a pretty lady and she liked to dress, let's just say, provocatively. So I go to her apartment and I knock on the door, and she opens the door and she looks absolutely stunning. Now, don't forget, I'm a young man in my 20s, and in front of me is this older lady. I describe what she's wearing. She had a fairly short miniskirt, and when I say fairly short, I perhaps I'm giving her the benefit of the doubt. It was shorter than fairly short. She had a top which barely covered a certain part of her anatomy at the top of her body. I mean, I would say it covered 75% of this part here, and it went right down to the navel, the open bit, which was revealing, and round her neck she had this thin gold chain with this massive-looking diamond on the end of it. And she'd said, before I got there, she'd said to me, Clive, I want you to book me the best restaurant on, I've forgotten where it was now, that street which is beside Hyde Park. Anyway, be that as it may, it was a really posh, expensive restaurant. And I was a bit nervous about that because we have limits on how much you can spend on the client. So I talked to my boss and he said, yeah, look, you can go for it, don't worry. But we were probably talking about a restaurant which is going to cost for 2 people £200, especially if you have a glass of wine. So I'm going to take her to this restaurant. But when I get to the front door and I see her dressed like this, and I go in and I'm thinking, oh my God, I'm going to take this lady to the poshest restaurant in London, and everyone's going to be looking at me like I've taken out a prostitute, an old prostitute at that, old looking young. So I felt kind of embarrassed, but I'm certainly not going to tell her to change her clothes. But I'm going to be sitting now in a very, very posh restaurant with somebody who looks like a prostitute. So we get in the taxi and we go to this restaurant and walk in the front door. I've got the reservation. And now I start to look around. and every single table in the restaurant is occupied by a businessman, mostly older than me, with a dolly bird secretary, or perhaps a lady of the night. So far from being embarrassed, far from being embarrassed, it was pretty much like I was one of the crowd. Anyway, we were sitting there, and she was having a little bit of a moan because, in her eyes, the investment portfolio that we looked after hadn't done quite as well as her property portfolio. You know, from her point of view, the properties were all up 100% in the last X years, 5 years, 7 years, whatever it was, and her portfolio hadn't made as much money, and she felt that we ought to be doing better. And one of the reasons why we hadn't done better was we weren't fully into equities, which had been doing very well. We were more diversified than that. So we had things like bonds and slow. And in those days, we did have gold, of course, in the portfolio, but these other assets, collectively hadn't moved as fast as her real estate, which would have been the best place to put money in the previous 5 or 6 years, or so she said. But anyway, we're having this discussion, and she points to the pendant round her neck. So she's got this very revealing top covering a little bit of her anatomy, and round her neck she's got this absolutely enormous diamond on a gold chain. And she points to the diamond and tried to look at it, and she says, "Clive, do you know where I got that from?" I said, "No, tell me." She said, "That was from my third husband." I said, "Oh, generous man." She said, "No, Clive, he cheated on me." I said, "Oh, and he gave you that?" "No, Clive, when I found out, I said, George, you're going to take me to the most expensive jeweler in Bond Street, and you're going to buy me the most expensive diamond in the shop." And he agreed, she said. So that was my experience with lovely Linda. I otherwise known as the Black Widow, because so many of her husbands had died on her. No suggestion of any foul play here. She just happened to be very one of these ladies who seem to attract men who are on their last legs. I did actually ask, or she let me know rather, about her current relationship. And she let me know that she's now dating a gardener, which was one of the reasons she was in the UK, although the gardener didn't stay with her in Park Lane. He had his own home somewhere else in the UK. And she said, yeah, and I said, "Well, you know, all your other husbands were millionaires. How, you know, you stay here gardener, that's a bit unusual." And she said, "Oh no, Clive, he's a millionaire too." And then she added as an afterthought, "But he's got cancer, so I don't think he'll be my boyfriend for very long." And I'm thinking, okay, you better marry him quick. Now, obviously the advantage from a bank's point of view when you're doing wealth management is if somebody inherits a lot of money, they're likely to put that money into your bank, and of course you increase your assets under management, which is always a good thing from if you're a wealth manager. So anyway, that's all I've got to tell you about lovely Linda, and also about real estate. I hope that you will think about the ways to invest in real estate. Oh, by the way, let's just talk about real estate, just finish off. When I talk about real estate investment trusts, there are many, many types of real estate investment trusts. I talked about those which own apartments and houses, but of course there's real estate investment trusts which specialize in theme parks. There's others which specialize in shopping malls. There's others which specialize in medical practices or hospitals. You can find a real estate investment trust specializing in just about anything under the sun. There are some which whose speciality is owning toll bridges and roads. You know, that's a sort of real estate in a certain sense. So if you have a particular area of real estate that you think will do reasonably well in all the circumstances, then you will find a real estate investment trust which is likely to fill that need. Now, another thing to talk about real estate investment trusts is dividends. In general, in most countries, one of the conditions of being a REIT is that you do pay out all or the majority of your income. So in general, most real estate investment trusts do pay dividends, and if you think income is your thing, if you need a certain level of income, you need to be looking at whether that income is enough for meeting your needs or not. But you'll find real estate investment trusts which pay quite low dividends, and you'll find others which pay very high dividends. You know, if you look carefully, you'll find some which have got dividend yields north of 10%. Now, the higher the yield, the riskier in general the real estate investment trust is. It might be heavily leveraged. I don't much like the leveraged ones. I mean, maybe if it's 30% leveraged, that's okay. So you can look at these sort of things to see if it's leveraged, but try and avoid heavy leverage. And also, if they have a high yield, they might be invested in a risky area of real estate, such as there are REITs which invest in what's called mortgages. So mortgages are more risky than the four walls, because in the event that we go into a recession, there will be a higher level of defaults. People won't pay the interest or principal on their mortgages, and then the mortgage company has to sell the property. And of course, selling the property in a recession means you probably get less than you paid for it. So mortgage REITs have high yields, but they're riskier bets. So that's all I've got to say about real estate investment trusts and lovely Linda. If you like this, like or thumbs up. I'll answer any questions you've got. You can put them in the comments, or you can write to me on LinkedIn, and I'll be happy to answer your questions. You'll see that from previous videos I have answered all the questions, and I'll try and look at all the comments if possible. And last but not least, if you want to learn more about investing in the stock market and making money from investments in the stock market or other areas, that could include bonds, equities, gold, silver, cryptocurrencies, or special investments, private equity, for example, do subscribe and you'll be notified when my next video comes out. So thanks very much, everybody. And oh yes, I would like to say thank you very much for your lovely comments. It's the lovely comments that I've received on my previous videos which encourage me to continue to share my knowledge and information with others, absolutely free of charge. At the moment, I've got no product to sell, no service to offer. I'm retired. I've been retired for 3 years, and I don't charge anybody for consulting with them about their investments or their strategy. I don't give investment advice as such, but I try to help you see if you're on the right direction, and I try to avoid recommending specific companies or anything like that. So don't take anything I've said in this video as investment advice. It's just guidelines as to how you can proceed. Thanks very much, everybody, and have a lovely day.